Welcome back, ladies and gentlemen. Thank you all for joining me today. It's a really exciting day because we're going to be taking a look at Meta Platforms, all the things that have transpired. I'm going through the quarterly reports of all the companies that I own, and I'm obviously going to still put out some, analysis and things of other companies that I don't necessarily own or ones that I've covered in the past. But my goal is I want to go through all the quarterly reports, give you guys kind of the news because I know some people do have these companies, and honestly, it's a way for me to be able to check myself and make a video, make sure I'm doing something in depth while I'm actually reading through and make some notes to myself. So I wanted to dive right into Meta Platforms today with that being said. So we're going to take a look at the Q3 earnings as well as some of the upcoming news that has happened more so recently. And let's dive right into it. So first things first, I have my girlfriend's iPad as always because I don't have this, information readily available off the top of my head. So with that being said, this is what we got. This is what we're going to roll with. You probably won't see it too much. I'm going to pop it up on the screen anyways, but let's dive right into this thing as we go. So Q3 earnings results, you're going to see it here. So the revenue wasn't terrible. It was down 4% year over year for quarter three. A big piece of that was actually due to the currency changes that we've been seeing. So it was a decrease of 4% year over year. It would have been an increase of 2% year over year on a constant currency basis. So that's really interesting. They have been saying that currency has been a headwind for them, and they foresee it being a headwind going into the future for right now. So make sure you want to keep track of that. The other thing I wanted to note too, so the cost and expenses has gone up 19%. So it's a 19% increase year over year, leading to income from operations going down 46%. Obviously, not good. I feel like I don't need to emphasize that more than just it's not good. Obviously, net income, that leads it down to net income. Net income's down 52%. Not good. The EPS as well is in that same range. So overall, quarterly wise and number wise, not very good at all. But you're going to see kind of Mark and the rest of the team's explanation for some of the expenses that have come in and why there's been such an increase in that, as well as there's been some headwinds in the ad space just in general. Obviously, Meta's not the only ones being impacted by this. Google, Pinterest, Snapchat, these are all companies being impacted by this, and as well as Twitter actually, but it got acquired. So we won't really know for sure unless Elon says anything. But diving through the rest of this earnings result, so kind of the key operational facts, I guess, that they kind of look at. So daily active users, or daily active people rather, was up 4% year over year. Monthly active people was also up 4% year over year. The increase in daily active users was 3% year over year, and monthly active users was an increase of 2% year over year. So that's pretty good. The users going back to growth. I remember a couple quarters, was it Q1 results or Q2? I think it was Q1. We saw negative. It's kind of what have started this whole stock price dropping significantly. Was really that. I remember, I think it was down like 25 or 30% after hours because of that. So not really that surprising there. Ad impressions was another big one that took a tick down. So in Q3 of 2022, ad impressions delivered across our family of apps increased by 17% year over year. And the average price per ad decreased by 18% year over year. So meaning they're getting impressions, but the ad price per ad basically is going down. And what's happening is that Reels is cannibalizing a lot of stories and just the normal Instagram posts that you've been seeing. So as they roll out Reels and as that gets more rolling better, you'll start to see that kind of tick up more and more and more. But in the time being, as you sort of cannibalize your users by using Reels, the same thing happened with stories, and the same thing has happened when they, move from browser to mobile and things like that. So not really that surprising, and Mark kind of goes on to say that in his conference call, so I'm not going to harp on it too much here. If you want to hear a lot more about it, just go listen to the conference call, but we're just going to hit the notes here. So let's keep going. One of the other things that I wanted to note too was that they actually repurchased some of their stock. So they said we repurchased $6.55 billion worth of our Class A shares in the third quarter as of September 30th, 2022. We have $17 billion available and authorized for repurchases. So they've been repurchasing shares even at a point where their free cash flow is going down. So that's one thing you want to pay attention to. To have $6 billion in Class A shares being repurchased while you're really not cash flow. I think it was a couple hundred million. You'll see it here in a second, but they're not very free cash flow positive right now. So to see that happen, that worries me a little bit. And really, that comes along with the fact that their long-term debt, they didn't have debt before. They actually issued debt to get this $10 billion to be able to use for repurchasing and a bunch of other different things. So there's part of that, and that's kind of where a lot of the cash came from that they currently have on their balance sheet was this debt. So again, headcount is up, and actually one of the news stories that I've been seeing this week, the Wall Street Journal reported that they are hearing rumors, or layoffs are supposed to start at Meta Platforms, and they're thinking it's going to be in the thousands. It's supposed to start this week that this video is coming out. Whether or not that'll actually come to fruition and how many people end up getting cut, I don't know, obviously. So I'll make sure to keep people stay tuned. If you're not already, I tried to put out a short, tried to put it out on TikTok. So follow me there if you're interested, but I'm going to keep trying to keep track of all this stuff for you. So that way, if you're interested in this company, you know what's going on. So moving on to the CFO outlook and really just the general kind of outlook across the company. So they said we expect fourth quarter 2022 total revenue to be in the range of 30 billion to 32 billion. Our guidance assumes foreign currency will be an approximately 7% headwind to year-over-year total revenue growth in the fourth quarter based on current exchange rates. So that's a lot under what analysts had forecasted for Q4, but as we've kind of seen this whole year with Meta, they've been under the forecast in general, so not really that surprising there. The currency exchange is really an issue. It's become an issue, not just with Meta, but a lot of the international companies that work with a lot of foreign exchange and a lot of currency that's not based in US dollars. So that's really interesting to see. The other thing I wanted to add too, so they said we expect 2022 total expenses to be in the range of 85 to 87 billion, updated from our prior outlook of 85 to 88 billion. This includes an estimated $900 million charge related to consolidating our office facilities footprint that we expect to record in the fourth quarter of 2022. We anticipate our full year 2023 total expenses will be in the range of 96 to 101 billion. This includes an estimated $2 billion in charges related to consolidating our office facilities footprint. So I wanted to note though, like that uptick in expenses. So the low range of 2022 is what they're expecting is $85 billion, which that's already more than what some companies are worth completely. That's like multiples above what a lot of companies are worth. So to be able to just spend that on your expenses is kind of crazy. And to add on to that, they're increasing those expenses. And obviously, I'm going to mention in a little bit what that's actually for. But they're increasing it from 85 on the low end in 2022 as their estimate to $96 billion for next year, which is kind of crazy. Maybe that comes down a little bit if they get rid of employees, but it's not going to be a lot because you'd have to get rid of a lot of people to get rid of that billions of dollars worth of expenses. So I'm not really sure what they're going to be doing outside of the things that they have already talked about in the phone call. So we'll see what happens there. So, and then the other thing that I wanted to note too on here and kind of that outlook is that so they expect for 2023, we expect capital expenditures to be in the range of 34 to 39 billion, driven by our investments in data centers, servers, and network infrastructure. An increase in AI capacity is driving substantially all of our CapEx growth in 2023. So that's what a lot of that expense is for, is a lot of that AI and sort of data center and all the things that are required to actually build that stuff out, because they're not doing some sort of cloud service. They're trying to do this all in-house, which honestly, they have the scale at this point, and they have the knowledge, they have the engineers and everyone involved to be able to actually do this. So I think that's why they're taking advantage of it rather than trying to outsource some of this stuff to a different company. There's a lot of different cloud compute companies, but I think because of the way that they want, or really what they want, they're trying to do this all in-house, which kudos to them. They have one of the largest AI supercomputers ever right now in their, at their site. So it's interesting to see like where this is all going and how this is all playing out. I wouldn't be surprised if we see, this I guess CapEx growth and expense growth going towards AI and all the things that surround that. A large capacity of what they're actually going to be spending is not necessarily going to be on Reality Labs. It's going to be on their FOA, so the family of apps. So think WhatsApp, Instagram, Facebook. Those types of things are going to be what most of their expenses and most of their CapEx is going to go to. Granted, there are some, you'll see here the segments of what each segment is winning or losing, or making or losing. But a lot of it's going to be growing towards the growth in FOA side rather than the Reality Lab side. Now, the other thing I wanted to know, again, looking at the balance sheet, so their cash and marketable securities, went down just slightly. That's partially offset by, I know they repurchased shares and probably spent a lot of money, but that's partially offset by the fact that they have this $10 billion in debt pretty much. And now I know it says 9.922, but when they announced it, it was $10 billion. So, you know, they're gonna use leverage in ways, and hopefully they use this cash for things outside of repurchasing, because I don't think that's probably the best use of their cash, because you can see here their free cash flow reconciliation for the quarter. So this is just across the quarters and how they how they calculate free cash flow on their own. Really, the thing that I want to note is, so you can see from quarter to quarter, from basically Q3 2020 to about Q2 2022, we were in the billions. We were, I know it dropped off right in Q2 2022 to 4,450,000,000 and some change, but to see it drop to $173 million here in Q3 2022 is honestly really shocking. And obviously, again, as I mentioned, a lot of that's going towards CapEx and things that they're buying and a lot of the purchasing that they're doing for their company. I almost feel like this year is going to end up just being sort of, people are going to write Meta off. And then in the back half, probably of 2024, when some of the overlapping quarters start happening, to right now, you're going to start seeing some growth come in. And I hope I don't eat my words, but I really do believe that I don't think Meta is going to go anywhere anytime soon. So we'll see. But their revenue and sort of their segment information and what actually it all looks like. So sales wise, you can again see that without being shocking, Family of Apps makes up the large majority of the sales that they have with the company. Obviously, Reality Labs is doing a tad bit better. Obviously, compared to last year, the quarter isn't doing better, but just overall, the 9 months were a tiny bit ahead. I do think, though, that when it comes to Q4, when it comes to Christmas time, this is going to be a lot of like, are they actually going to sell through these products, and does this product actually have sell-through capacity? They sold a lot of Reality Labs products last year, so I'm curious to see this year if it's also the same case. So we'll have to keep track of that. And again, taking a look at the income and loss from operations, you know, it's worrying to me to see them lose so much money on Reality Labs. And they actually in the call said that they're going to lose more money in Reality Labs. So to see them lose that much money in Reality Labs is very worrying to me. Um, and again, I understand that they can generate money and they generate free cash flow normally, but they're going to be spending a lot of money on AI and just building out CapEx in general. Um, it can be a little worrying to see, almost losing 2.5, 3 billion, 3.6 billion dollars a quarter. Not even, there's companies that can't even make this in revenue, let alone try to make this in sort of profit. So then that will drag down their earnings, at least in the near term, until they start, shifting to a more profitable approach for Meta and the actual metaverse side of Meta. But going on, looking at the advertising revenue by user geography, so we're seeing some sort of tick downs in the United States. Obviously, not really that surprising given just the general flow of the economy right now, and just across the board. It's not just a Meta issue; it's also an issue across other companies as well, as I mentioned earlier. Asia Pacific is sort of due for a comeback, given that China specifically has been on lockdown for quite a long time. And they're starting to let up a little bit. We'll have to see, if they kind of go through what we went through in 2021, where it was just kind of like open free for all. People were going crazy, and it was like, people couldn't buy enough products. So I'm curious to see what happens there. The rest of the world, everything's pretty much stagnant, and unsurprisingly, Q3 doesn't usually do that well comparatively to the other quarters in the years that we're looking at. So not really surprising. Again, Q4 is what I want to see, because not only are a lot of companies going to be ad spending during Christmas time, between like pretty much between Thanksgiving and Christmas time, not only are you going to see a lot of ad spend there, but we're also going to see, the Reality Lab side of the business. Will it actually sell through? So that's what you should pay attention to this next couple of quarters, really, is what is the impact of Christmas time and people buying things and ad spend and all that. So net income, obviously, as I mentioned earlier, net income's down quite a substantial amount. Not really that surprising given everything, but if they're going to keep spending and keep losing money on Reality Labs, it's going to keep impacting their net income. So when you're looking at this company, make sure you're paying attention to that. CapEx, again, giant growths in CapEx, and it's expected to balloon even further in 2023. So if you see this go up higher and you see expenses start to hit the income statement, and it looks like the profit is going down and down and down, don't be surprised. I'm telling you right now, it's next year they're gonna have more expenses, they're gonna have more CapEx. So it's gonna hit their net income, and it partially will hit their cash flow statement as well. So don't be surprised there. Average revenue per user, not terribly down year over year. I don't think that Q3 is the best for advertising. There's not really anything going on during that time because from what is it, January to about March, kind of have like residual, Christmas along with February's Valentine's Day from what, April, May, June. You kind of have like the beginning of summer, end of school, July, August, September, not really anything else going on. So it's not really that surprising. Back to school is part of it, but I don't think that that really is necessarily the best thing for ad spend. Parents are going to buy what parents are going to buy. So, but moving on, one of the things I wanted to touch on was actually something that they had said on the call, and this is what they said. So he said, moving on to monetization, I've discussed in the past how the growth of short form video creates near-term challenges since Reels does not monetize at the rate or feed or stories yet. That means as Reels grow, we're displacing revenue from higher monetizing services. I think this is clearly the right thing to do so that Reels can grow with demand we're seeing, but the closing this gap is also a higher priority. Even with progress we've made, we're still choosing to take more than 500 million quarterly revenue headwind with this shift, but we expect to get to a more neutral place over the next 12 to 18 months. I mentioned last quarter that Instagram Reels had crossed $1 billion annual revenue run rate. We continue scaling monetization across both Instagram and Facebook, and the combined run rate across these apps is now $3 billion. Beyond Reels, messaging is another major monetization opportunity. Billions of people and millions of businesses use WhatsApp and Messenger every day, and we're confident we can connect them in ways that create valuable experiences. We've been talking about, and when I did my last video, this was something that I had touched on too. So again, as I mentioned earlier, Reels is going to be cannibalizing part of their business. Not really that surprising because they have to learn how to monetize it. They have to learn what the best way to place ads is. So that's not really that surprising, but one of the things I wanted to focus on was this click to message and what it actually means. And when Sheryl Sandberg was still at the company, kind of towards the end of her tenure here at Meta Platforms, this was actually one of the things she touched on, and I think she actually ended in her ending remarks for her last call. She had actually mentioned that how important it was to get this started because it's a huge opportunity and it creates that personal connection with someone to a business, and businesses can churn through people better and actually get leads that actually close. So that way it's not just like spending for impressions, you're actually getting sales out of these customers that are clicking to message your business, and they're bringing that to WhatsApp. And again, WhatsApp has a bunch of people on their app, so it'll be interesting to see, especially because WhatsApp used in a lot of other countries, not just in the United States. So it opens up opportunities for businesses in other countries that don't necessarily have that right now. And because WhatsApp is so heavily used across the world, it can create a lot of opportunities. And I think that if anyone can do it, it's going to be Meta Platforms. And then I want to add one more thing from the call, and then we'll be done and out of here. So Susan Lee said, yes, thanks, Brian. So as Dave mentioned in the script, we expect 2023 CapEx to be in the range of 34 to 39 billion, with our investments in AI driving all of that growth. We're very focused on evaluating the ROI of our AI investments, and that'll inform our future level of spend. But so far, we've seen continued strong impact on our recommendations products from advancing developments in our AI work. In the Q2 call, we had shared that a single AI advancement in scaling our recommendations model had led to a 15% watch time gain for Facebook Reels, and that gain has continued to grow, and we expect there to be additional watch time improvements coming from that work. On the ad side, we're also continuing to roll out more AI and ML improvements in some of the new ad offerings. We're encouraged by all the early examples that we've seen, so this is something that we'll be watching very closely. We think we're early in this journey, but our level of CapEx investment will depend on the returns that we generate through these investments in AI. And if we generate significant engagement and revenue gains, we'll continue investing here. And if we don't, we'll pace our spending accordingly. So that's pretty much the end of all the notes that I had here on Meta Platforms. But one of the things that I wanted to add to sort of towards the end was that when you're looking at a company like Meta, the fundamentals have shifted. Now, whether good or bad is, yet to be seen, but it's no longer this just like, free cash flow generative business that does nothing but print money. It's not necessarily the case anymore that that is the business that we're looking at. It could be, it could continue to be, but they're taking steps right now to build out new platforms, and it introduces new risks. Again, if they're going to be spending a lot of money on the actual metaverse and reality labs and everything that involves that, we have to be careful as investors not to I guess, be overly optimistic about this opportunity. And I like the metaverse. I like what I've seen so far, both from, Meta themselves and as well as creators on the YouTube platform. So I like what I've seen, but I can't take out the fact that there's still a risk because of how much they're spending. Now, for me personally, I still have shares. I think my cost basis is like 230. If you want, go back to my most recent portfolio review if you really want to see it. I haven't added since. What I'm really trying to do is not over allocate to this company, because I think on a cost, on a cost basis, cost instead of market value today, I think it's like 25% of my total portfolio. But because it's dropped so much, I think I'm like 60% down or 50% down. Because it's dropped so much, I have to be careful, trying to keep doubling down, doubling down, because it's going to become more and more risky to the rest of my portfolio, and I'm not trying to blow up my portfolio, obviously. So with that being said, I am looking to see if this is worth something buying or just holding over the near term and just riding out the pain, or maybe picking up shares on the cheap right now and then selling before the year ends so that we can pick up some tax loss harvesting for the shares that obviously depreciated a lot. So that's what I'm kind of looking at now, is deciding whether or not that's something I want to do. But let me know what you think. Let me know what you're doing with Meta Platforms. If you're investing, awesome. If not, and you're sitting on the sidelines and watching the old ruckus, that's awesome too. But let me know if you have any companies that you want me to look into. I'll be going through the rest of the quarterlies on my portfolio, as well as some others probably. So with that being said, hope you all have a great day and happy investing.